Chapter 1: The Resilience of the Financial Spirit. Have you ever wondered how some investors bounce back from significant bond market losses, while others crumble under the pressure? This question piques the curiosity of many, and today, we're going to explore the answer. In the grand theater of finance, the bond market takes center stage, known for its potential rewards, but also its inherent risks. Like a turbulent sea, it can be calm and serene one moment, only to become a storm of uncertainty the next. The bond market doesn't discriminate, and it's not uncommon for investors to find themselves caught in a wave of losses. But let's take a step back. For those new to the world of finance, a bond is a type of investment where you lend money to an entity, typically a government or a company, in return for periodic interest payments and the return of the principal amount at the end of a specific term. It's much like lending a friend $20 and expecting to get it back with a little extra for your trouble. However, the bond market is not as simple as lending money to a friend. It's a complex system influenced by various factors such as interest rates, inflation, and the creditworthiness of the issuer. Navigating this system can be challenging, and even seasoned investors can sometimes find themselves on the losing end. Yet, it's not all doom and gloom. Some investors, through a combination of grit, determination, and astute financial strategies, manage to bounce back, turning their losses into lessons, their failures into foundations. These individuals embody the resilience of the financial spirit, a testament to the power of perseverance in the face of adversity. In the coming segments, we'll be introducing you to some of these financial phoenixes, real investors who weathered the storm of the bond market and emerged stronger. We'll share their stories, their strategies, and their insights, providing you with a roadmap to navigate your own financial journey. So, whether you're a seasoned investor, a financial newbie, or someone simply interested in the dynamics of the bond market, we invite you to join us on this enlightening journey. Stay tuned as we delve into some inspiring comeback stories that demonstrate the power of resilience in the face of financial adversity. Chapter 2: The Fall. The path to financial success is never smooth, and every investor has their share of ups and downs. Let's take a journey into the world of bonds, a landscape filled with promise, yet fraught with perils. Imagine the story of Jane, a seasoned investor who had her fingers burnt in the bond market. She put her faith in a high-yield corporate bond, lured by its attractive returns. But as the company filed for bankruptcy, Jane saw her investment crumble, causing her financial plans to derail, and the emotional strain was palpable. Then there's Mark, a newcomer to the bond market. He invested heavily in government bonds, thinking they were a safe bet. However, he didn't account for the impact of rising interest rates, which caused the value of his bonds to plummet. It was a harsh lesson in the importance of understanding macroeconomic factors. And who can forget Lisa? She had a diversified portfolio, but a series of unfortunate events led to a market downturn. Her investment in municipal bonds took a severe hit. She watched helplessly as her carefully built portfolio dwindled, a stark reminder that even the best-laid plans can falter. These stories are a testament to the inherent risks in bond investing. They underscore the fact that high returns often come with high risks. They remind us that even safe investments can be impacted by larger economic forces. And they show us that no strategy is foolproof, that market downturns can hit when least expected. But more than that, these stories highlight the emotional toll of financial losses. The anxiety of seeing your hard-earned money diminish, the sleepless nights, the worry about the future. It's a challenging journey, filled with moments of doubt and despair. However, it's important to remember that each of these investors, though knocked down, was not knocked out. They may have fallen, but they were far from defeated. Because, in the world of investing, one's mettle is truly tested not during times of prosperity, but in times of adversity. But as they say, it's not about how hard you fall, but how high you bounce back. Chapter 3: The Rise. Bouncing back from financial losses requires more than just grit and determination. It requires a plan. Investors who have managed to recover from their losses have done so through a combination of strategy, learning, and a shift in their investment approach. Take the story of John, for instance. After experiencing a significant loss in the bond market, he didn't just lick his wounds and head back into the fray. No, he took a step back, reassessed his portfolio, and sought advice from financial experts. He recognized that he had much to learn about responsible investing and risk management. John's story isn't unique. Many investors who have bounced back from financial losses have done so by embracing continuous learning. They've taken courses, attended seminars, and read books to broaden their understanding of the financial world. They've learned to analyze market trends, to understand the intricacies of different investment vehicles, and to make informed decisions based on their risk tolerance. But learning isn't enough. It's the application of that knowledge that truly makes a difference. Jane, another investor who suffered a significant loss, used her newfound knowledge to overhaul her investment strategy. She diversified her portfolio, invested in a wider range of bonds, and ensured she had a healthy mix of high-risk and low-risk investments. The changes she made weren't drastic, but they were informed and strategic. Finally, these investors understood the importance of patience. Financial recovery isn't a sprint. It's a marathon. It requires a long-term perspective and the willingness to stay the course, even when the going gets tough. They knew they wouldn't recoup their losses overnight, but they also knew that with the right strategies and a bit of patience, they could rebuild their portfolios. The road to financial recovery is often fraught with challenges, but it's also filled with opportunities for growth and learning. And it's important to remember that no investor is immune to losses. It's how we respond to these setbacks that truly defines us. Remember, every setback is a setup for a comeback. Chapter 4: Lessons from the Journey. While each investor's journey is unique, there are common lessons we can all learn from their experiences. Each tale of recovery from bond market losses reveals a roadmap of resilience, a testament to the indomitable spirit of the investor. The first lesson is responsibility. The allure of the bond market can be intoxicating, with its promise of steady returns. But as we've seen, it also holds the potential for great loss. The investors who triumphed did not do so by chasing quick profits, but by taking calculated risks, understanding the market dynamics, and investing responsibly. They didn't just throw caution to the wind. They tethered their ambitions with a strong rope of prudence. Next, we see the significance of continuous learning. The financial landscape is ever evolving, shaped by changing economic conditions, technological innovations, and societal trends. Those who bounced back didn't just lick their wounds and plunge back in. They took the time to learn, to understand what went wrong and how they could improve. They adapted their strategies to the new market realities, honed their skills, and armed themselves with knowledge. Risk management, the third lesson, is critical. The bond market, like any investment avenue, carries inherent risks. The successful investors we've discussed didn't shy away from these risks. Instead, They acknowledged them and developed strategies to mitigate them. They diversified their portfolios, set stop-loss limits, and monitored market trends closely. They understood that managing risk didn't mean avoiding it altogether, but navigating it with a clear-eyed understanding of their own tolerance for loss. These lessons don't just apply to the bond market, but to any form of investment. They underscore the importance of discipline, of constant growth, and of a balanced, thoughtful approach to risk. As these stories demonstrate, financial resilience is not just about recovering from losses, but also about growing and evolving as an investor. It's about transforming each setback into a stepping stone towards greater financial understanding and success. Because at the end of the day, it's not the fall that defines us, but how we rise. Chapter 5. Your Financial Comeback. Now it's your turn. How will you write your financial comeback story? Every journey, including the financial one, has its bumps, twists, and turns. But it's these very challenges that shape us, strengthen us, and ultimately lead us to our moments of triumph. There's a wealth of wisdom to be gained from the experiences of those who've navigated the tumultuous seas of the bond market and emerged stronger. And now, it's time to apply this wisdom to your own financial journey. Start by reflecting on your investment strategies. Are they aligned with your risk appetite and financial goals? Remember, the key to successful investing isn't about chasing quick profits, but about making informed and responsible decisions. This is where continuous learning comes into play. Stay updated with market trends, enhance your financial literacy, and always be open to learning from your mistakes and successes alike. Next, consider your approach to risk management. Are you diversifying your investment portfolio? Are you regularly reviewing and adjusting your investments? Effective risk management is like a safety net. It won't prevent falls, but it can significantly soften the impact and help you get back on your feet faster. And finally, cultivate resilience. The road to financial success is rarely a straight line. There will be setbacks, there will be losses, but remember, they are temporary. They do not define you or your financial future. It's your response to these setbacks that truly matters. So, face them head on, learn from them, and use them as stepping stones towards your financial comeback. We invite you to share your experiences, your strategies, and your own stories of financial comebacks in the comments. Let's foster a community of learning, support, and resilience. Remember, the road to financial resilience may be challenging, but with the right mindset and strategies, you too can bounce back from any setback. So, are you ready for your financial comeback?